audio quality is better this time, but I don't know. Because I watched my last stream and it was very lagging and sometimes the audio haven't worked at all. But okay, that's perfect. So we will wait until there are more people. So you guys know the topic of this time, the stream, will be trading with support resistance. Nice small strategy, but with a lot of depth. And yeah. Do you guys have strategies your own, or what are you using? Like confluences and all that kind of stuff? Perfect. I know a lot of people who say it doesn't work to only trade with support resistance, but I will prove all of them wrong. Trust me. Oh. If you have any questions or anything, feel free to ask. So this isn't any problem. I will share my stream. Perfect. Can you all see my screen, or? I hope everything works perfect. If not, please let me know. Perfect. Yeah, the stream will be recorded. I don't know who records the stream, but as far as I know, there is one guy who joins every live stream and records it. So I don't know if the beginning will be recorded completely, or I don't know. Okay. Have a nice day then. Hope everything is fine. Oh. Where are the people? Let's wait a couple more minutes. Hello, mate. How are you doing? Mm. So, okay, then I think I will begin. The people maybe come not. I don't know. So, to get everything started, as always, I don't have anything scripted or I don't know. Just to say it in the beginning, there are a lot of people who say, okay, it doesn't work. Oh, don't have it. No. No, there are a lot of people who say, no, support resistance doesn't work, or I don't know. But there is more than only a support resistance area. The key things are like drawing it on the right spot, and there are so many things that you have to consider. And yeah. Hey Joe, how you doing? So let's jump to the charts. I will open my chat on my phone. Let's see. As I said, I hope the audio quality is better than last time because I watched the recording and it was awful. So let's hope it will be better this time. So let's see. Go to the, I don't know, let's start with this chart. So the first thing is how to draw support resistance the right way. So I would recommend to first have a look on a very high time frame, like the 1 day time frame. So, and then you can see, okay, like here you have a doji candle with a nice wick to the upside. Then you can see, okay, we got here as well a lot of rejections from both sides. And I always start from the top. So I see, okay, I have here this zone and these wicks, and then I would try to use this zone. Always try to connect as much candles as possible when they support resistance. And then I would say down here maybe. So let's do it maybe a bit further down like this. Here. This looks good. And then I would try another one in here. As I said, to connect as much points as possible. These are the major key support resistance areas. Maybe, let's see, if we move this to here. So maybe something like this. Yeah. So there is no perfect accurate support resistance areas. To be honest, I would remove this one. So I would say, okay, these are my daily support resistance areas. So then I will move to the 4 hour. And then I can see, okay, as I said, as much you trying with support resistance area, you are trying to connect as much swing points as possible. For everyone who doesn't know what the swing point is, it's like here. This is a point at the support zone, and we got a nice move to this point, and then something like this. So these are swing points because these are points that you can see when you just have to look at the chart and they jump right into your eyes. So like these points. And then you can say, okay, like here and then here. Maybe here. So. And as you can see, a lot of people say the best strategy that you can have is you wait until you break a support resistance zone, like here, and then enter the retest. So like here, you see, okay, you get a little bit of consolidation. Stop loss, I would do it below these wicks, and then you can target the next zone like this. So this would have been a 5 risk to reward ratio. But as you guys know, I love when the risk reward ratio is way bigger than this, and I will give you some tips how you can improve this strategy, because this strategy works, but we will go way deeper than just the basic understanding of breakout, retest, and then trade. So let's remove this again. Remove this and all these points. Oh, perfect. So now, as I said, we are on the 4-hour chart, and we will draw in support resistance zones as well. So like this is a support resistance zone, but 4-hour. I would recommend to use different colors or add a text to a zone, so you know, okay, this zone is on the 1 day, this zone is on the 4-hour, this is a 1-hour zone or 1 week zone. So you don't confuse yourself. So let's see. So we have a zone. This looks like a nice zone. So let's get this and put it here, maybe. Yeah. As you can see, this zone, we got a lot of rejections, like a rejection here, then here, then we got a bounce here, then we got retests here and here, another bounce here. So this is a strong and valid support resistance zone. I would always check in the past, so if there are multiple touches, if the zone got respected as well in the past, because this makes a zone even stronger. Another key point that I love to make, or I use to make a support resistance area even stronger, is when the support resistance area is valid, or let's say got respected, not only in the past, but only, let's say, in the last 1 week, in the last 1 month, depends on the time frame. But as you can see, this zone was valid on 15th of August and is still valid on 27th of July. So this zone is really nice because, I repeat it again, we got a lot of rejection and bounces. This zone is present in the past as well, and we got rejections and bounces like a couple days ago, a week ago. So now you can draw in all of these zones, then you can move to the 1 hour, to the 30-minute, or to the weekly, as you wish, to get as much zones as possible. But I wouldn't recommend to have, let's say, I don't know, 50 zones or whatever, because the more zones you have, the more you confuse yourself. So if you have a ton of zones and then move from time frame to time frame, and then like 2 time frames up, like from the 1 hour to the 1 day, then there are so many lines. What I would recommend as well when you trade, for example, you want to have a look at BTC. So let's remove all of these again. And then I would say, okay, like this zone, I would add it to a folder, then this zone as well. And this zone right here. And then add these 2 zones. And then I would say, okay, this zone is one day support resistance, and this zone is the 4-hour support resistance. The benefits of doing this is so you can say, okay, I can draw in 1 hour support resistance, and then I can move to the, let's say, even to the 1 week chart. And as I said, you will have too much lines then. But you can say then, oh, okay, I don't want to see the 4 hour. And then you have a nice view on only the major support resistance zones. So, okay. Let's put them back in again. So now what I wanted to show you is to get the strategy even better, because this strategy performs very well. Like here as well, you have a nice move to the downside, rejected of the 4-hour support resistance, came back to the 1 day support resistance, and then got another move down. So now you would say, okay, this would have been, let's say, you want to go safe because this is a swing trade. We are on the 4-hour chart, and then you would say, okay, this would have been a nice 5.3 risk to reward. And I think you all can say, wow, that's a very nice trade, and 5 risk reward is nice. And yeah, that's true. But I am not here to say, okay, you have to trade like this support and resistance because you get only a rejection. But now let's go a bit deeper. If you have a look, even on the 4-hour chart, let's remove this again. You see, okay, you got here a little bit of consolidation. It's not that much, but consolidation is consolidation. Okay, that's not what I wanted to do. Let's do this, for example, in green, and then remove this. So what you can see now, perfect, is you have your move down again, and then move up, then had a bit of consolidation, and then had a nice move down. So let's go to another part. So a lot of people, or I know a lot of people, and I think you can all say that's true. Let's talk about chart patterns. I think you all know about chart patterns, like, for example, if you have a basic head and shoulders pattern like this. I think you all know these chart patterns. And for example, the here, a falling wedge. Okay, thanks. So like this. You all guys know, okay, you have a falling wedge like this, and then get a breakout, maybe a retest, and then like this. I think you guys all know about this one. The basic patterns, people say no, don't use them, they won't work. And then you start retesting and all that kind of stuff, and you see, okay, no, they are right, because the win rate isn't that good, to be honest. And that's true. But that's why you have to get more in depth with them, So, like you have a falling wedge, and people say, yeah, but can break to the downside as well, and then you get a retest. So, but I will show you a small trick how you can identify, okay, which direction will the chart pattern play out. It's never guaranteed, but you can increase your chance, your win rate a lot with it. So, as I said, let's move back to this. So, you can see, let's remove this again. Perfect. Now do it only like this, like so and so. Another thing is false breakouts. You guys all know it. If you trade with support resistance, if you trade with chart patterns, there are so many false breakouts, and this strategy will definitely decrease the chance that you're trading a false breakout. Or even if you trade a false breakout, it will still be a 1 to 2 risk reward. So the chances to lose will decrease for sure. So now what we are doing now is we are moving to a lower time frame. I would recommend to use an order like the daily, the 4-hour, the 1 hour, then the 30-minute, 50-minute, 5 and 1 minute. So as I said, we started on the daily. We are now on the 4-hour, and you guys know what is coming next. It's the 1 hour. So let's move to the exact same. Let's go to like here. And guess what? So what do we have here? Remove this again. So perfect, like this. So what can you see now? You can see a beautiful double top pattern, for example, like here, which indicates a lot of bearish momentum. Or what you see as well is like if you draw your line here and then something like this. You see you got a false breakout, but as well it's a descending triangle here. Perfect. False breakout, as I said earlier. And you guys know, okay, you have a horizontal support and then your trend line to make this pattern valid. And you know, when you have a descending triangle, it's very likely that the price will push to the downside. So, because it will mostly push to the side where the horizontal support resistance is. So, what do we can do then? Now we know, okay, we got a lot of rejections here, but here were the most amount of buyers. The buyers push the price up, and then the sellers move the price down. And there are always limit orders that haven't been filled yet, and then they got triggered, like here, and then price pushed up a second time. But still, there were a lot of there were liquidity, whatever, a lot of limit orders. And as you can see, okay, there were limit orders, but not as much as, for example, here. So the price pushed back up, but reversed very soon because the buying pressure wasn't the same. So what can you do now is, okay, you can say I am at the 1-day support resistance area, and I have a beautiful pattern and a second pattern. As I said earlier, this double top pattern. And now you can say, okay, I enter a short here. I'm not a big fan of trading breakouts, but you have a lot of confluences here. You even, it's a picture perfect example, because you even have a head and shoulders pattern here. Like this. And you guys all know, okay, now you have one bearish pattern, the double top. You have a second bearish pattern, the triangle, and the third bearish pattern is the head and shoulders. Yeah, sorry. So now you have so much bearish confluences. You are even on a resistance zone, and here you saw, okay, here's a breakout. It was a false breakout. Why? Because we got a bunch of bearish confluences. And now you can even go deeper to say, okay, this would be my setup. So just like this for now. Now you can say, okay, I have a double top pattern. And now you can say, okay, I add my indicator to the chart, like my RSI, and you can see, okay, we had this high. I will mark them second. I will add here and here. This were the highest points, and as I said, there are nearly equal highs, and equal highs are as well bearish. So let's see what the indicator says. We don't look for, okay, it's oversold, it's overbought, and all of that kind of bullshit. We don't care, we give a fuck about it. We only see, okay, we had this point and we had this point. And guess what? We had a bearish divergence on the RSI. We had a bearish divergence on the MACD. No bearish divergence on the stochastic indicator, but still it was equal. So okay, now you can say, or now you can see, we have two bearish divergences. We have a resistance. We have a triangle. We have a head and shoulders and a double top pattern. Now you don't have to say, okay, I put my stops above this, because why? There is no reason for it. Because if you trade patterns, you try to keep your stop loss as small as possible. And when you trade a head and shoulders, you always put your stops above a shoulder. You always put your stops when you are trading triangle above the last high. So if you want, you can move your stops here. Like here, you can see over this liquidity, or this wicks, and now your risk, stop loss is 1.13%. And as I said, now let's target like the next support resistance. If we go back to the 4-hour, we would have said, okay, here, stops here. As you can see, stops 1.13%. And now we doubled, or we more than doubled the stop loss. And our risk reward would be 5.7% with not that much confluences, because the only confluence we have is, okay, we have a resistance area there. We got a nice breakthrough. like here, turned the support into a resistance area, and now we want to get a nice rejection of it. As I said, 13.66 against a 5.71. And guess what? There it is. It was a 12.79 risk reward. But not only was the risk reward way bigger, but the confluences, there are way more confluences. Besides only, okay, there is a support resistance area which got flipped and now we want to trade it. It's way better this time because you have more confluences in place. You can even say, okay, let's add the where is it? The EMA and this EMA. So let's go back to the 1 hour. And even here, you can see, okay, after this break, or after this large candle, we were below the 200 EMA moving average, which was a good sign as well. You can even add, I don't know, at the VWAP. Where is it? The volume weight average price. You can even add that, and let's say we remove the indicators here again. And now you want only printed the, no, this is the wrong one. Don't want this. I want this. So, and now let's say, okay, you only want to have the quarterly and the yearly because these were the strongest. And now guess what? Let's look a bit deeper into it. The quarterly, okay, was below, but have a look where the yearly VWAP was. Right above this triangle, which is another perfect indication that prices will go down. And prices went down. You were in a nice profit. And let's say here, to remove this again, or let's say so, this, remove this indicator. Let's see down here. You can see as well, okay, we are on a higher time frame. So, first of all, you see, okay, you got a nice rejection, a nice bounce, sorry, of the support resistance area. It's a daily as well, but this indicates bullish bias. So so you can say, you can have a look at the chart and can say, okay, price looks bearish, but it's not confirmed. So you can say, okay, because of this week, it's confirmed. No. But what you can do is to say, okay, let's go to 1 hour. Let's have a look and say, okay, we got consolidation here as well. Everything comes down to a consolidation because price works. How price works is easy. You always have an impulsive move up and then a consolidation and then an impulsive move down. Or the other thing is you have an impulsive move up, then you had a consolidation, followed by another bullish move. And for sure, in the opposite direction as well. So a move down, a consolidation, a move up. So this is rally, base, rally, as well as here, rally, base, rally. Sorry. My bad. This is rally, base, rally. And this is rally, base, and then retracement. So, and this works as well. similar in the opposite direction like this one, and then we continue. So let's see. Here we got a nice move down, and now we got a consolidation. So let's say we have here, and we can only say, okay, we have this one at the moment. We don't know where prices will go. We don't know anything, but we know we had a rally and a base. Or in this case, we had a rally to the downside and a base, like here, a consolidation. And now we are on the 1 hour. Always remember, this is your 1 day support resistance, a very key support resistance area. Now, okay, let's move to the 30-minute. Okay, then you can see we had a lot of dojis and a lot of wicks to the downside. Now you can say, okay, I don't know, I'm not sure about this trade, or you can say, let's go a bit deeper. So let's have a look on the 15-minute. So what you can see on the 15-minute is you had a move down, move up, and then another move down and a move up. So like this, you can say, okay, if you only go for the candles, you can say you have equal low. If you don't go for the wicks, only for the candles, and then you can say, okay, looks good so far, but I want to go sure. And then you can say, okay, I'm on the 15-minute. This is a 15-minute support resistance area. And on top here is as well a 15-minute support resistance area. Now, guess what? We broke above this 15-minute support resistance area. We came down and got another push. So now you can say, okay, I want even more confluences. How can I add more confluences? Use the fib retracement. Use, as I said earlier, pick your swing points, the lowest point and the highest point, and your golden zone is right in here. This would be your golden zone, like here. Can remove this as well. The golden zone is a zone where the price is most likely to reject or bounce. And now you can see, okay, I have a 15-minute support resistance area here. I have a golden zone here. Maybe I even have the, where is it, EMA. Okay, even EMA is above, but it's in a good distance. It's far enough away. Then you can say, okay, let's, for example, check the VWAPs. Okay, as well, the VWAP is far away as well, because it's not only a good sign when the EMA is right at your trade, support resistance area on the 4 hour. If you want to go safe, as I said, you have a 4.13 risk reward, or if you want to go a bit more risky, you have an 8.96 reward. And let's see how the trade plays out. So let's go even on the 1 hour to see it a bit better. And as you can see, the trade plays out nicely. 8.26 risk reward. And you can even say, okay, I go on the weekly chart, do my analysis then on the daily chart, and then look on the daily chart for like small patterns. Go to the 4 hour to make them even bigger, and then you can see, okay, I enter right here with a small stop loss and a huge take profit because I'm targeting the next 1 day support resistance area. You can even say, okay, here you can even say you target this, the 1 day support resistance area again. This would be then a 20 risk reward ratio, and it's as I said, it works. Okay, here we would have get stopped out break even, but let's say okay, like this. As I said earlier, it's always the same, price always works the same. There is nothing more to add. Guess what we have here? As I said, we have here, like let's do it in green again and with no midline. Let's delete this position. And again, let's move down to the 30 minute. So, what can you see, guys? As I said, it's always the same. You have an awesome, like this, maybe here, and then like use this point. You know there's anything perfect in the market, but what do we have here? Right, a nice rising wedge with a break below. So you even have, like here, again, an equal high, not an equal low, that's wrong, equal high. You have now you can look again on the RSI and on the MACD, and now you can say, okay, here this was my highest point, and this was my highest point, and then you can have a look, zoom out a bit, and what can you see? Okay, I have a bull diff here, a bear diff, sorry. MACD, there isn't much, but again, 2 out of 3. This time, a stochastic divergence. I love to use this, love these divergences. And what do you have in? So let's combine what you have found. You found a rally, you found about a base, and now you don't know what's happening next. But you are on a 4-hour support resistance area, at the moment resistance. You got a double top pattern, you got a rising wedge pattern, and what you can do now is you can trade the breakout like this, back to the 1 day again. Or the other thing you can do is to say, okay, let's play it more safe. We have a right here, this, we have a where is it? Here we have a 15 minute, 30 minutes, sorry guys. Don't have it. Okay. Then change this to 30 minute quick. 30 minute. No, not what I wanted to do. Perfect. And a 30 minute on top here as well. And now you can say, okay, I wait till the breakout and then trade again the retest. Like this. And you have as well a 10 risk reward ratio. And if you go and see, we went down until 6.63 risk reward. And now let's put in all of them. So these 3 positions. And now let's say you let all the money go through. You never took partials. You always took a full TP on the best points possible. So these are 5 days. less than 1 week, you have a 12. Let's put our calculator out. You have a 12.79 risk reward plus 8.29 plus 8.29 plus 6.63 plus 6.63 in less than 1 week. If you put in 1% of your port in all of these 3 trades, you would have made 27%, nearly 28% growth of your port in less than 1 week of trading a cryptocurrency. So this is only BTC at the moment. I don't use this strategy at the moment because this is more like what is called like a swing trading, intraday trading strategy. But this would have been 27.71 risk reward in less than 1 week. And now, let's say you don't have only one cryptocurrency, right? You can do the same on Ethereum. You can do the same on Algo. You can do the same on AVAX. You can do the same everywhere. And now imagine how much money you would have made in 1 week trading this simple strategy. It's not like a YouTube video to say, hey, this strategy works and this, and this, and you need all of these indicators. Have a look at my chart. Have a look at my chart. You can do this strategy without indicators. Isn't that perfect? In my opinion, indicators will ruin you 100%, because if you have like 5, 6 indicators, they all give different signals. So I got profitable when I started to don't use indicators. Look at this. This is only BTC. And we risk you would don't 2%. Stick to less money, but if you have the right strategy and the right thinking and you know what you're doing, you can double your port in 1 month if you wish. Now, I hope you guys understood everything, and if you have any more questions, feel free to ask. And yeah, I hope audio was clear and you have understood everything. But if there's anything more you want to know, let me know. Or if you want that, I don't know, have a look at some coins or anything, just let me know. No, the trades are DCA free. As I said, you can, if you want, you can increase your stop loss and add the DCA, but I would stick to no DCA because, as you can see, you have so much confluences in place. You don't need a DCA because your stop loss is 1.13%. Here it's less than 1%, and again less than 1%, and you are still trying to catch a 1-day support resistance zone. So I don't think you need a DCA or anything. So you can actually remove this one. So I wanted to give you a better understanding, a better way to trade support resistance. I really hope you learned something. You can take something home from joining the session. Hope you learned something new. I hope you liked this little and 50-minute support resistance trading course. And yeah, for me, in my opinion, if you have understood what I tried to teach you, it's game breaking. So this is a strategy I used a lot, and I use a lot when it comes to swing trading and intraday trading. I wouldn't recommend it for scalping because the price is moving so fast. They need other strategies. But if you want to go with a high risk reward and you are swing trading, this is definitely your strategy that will make you 100% profitable in the next month. If you have understand it correctly, and if I tell you this kind of strategy, because when I had looked at YouTube videos, so they dance and all that kind of stuff. It's frame analysis, start on the daily, and you move down the time frame to get an even better entry. So if you would have only let's say you only trade a 4 hour, that's fine. But then I still would recommend to look at the smaller time frames. Because when you look at the smaller time frames, you get a way better entry, you get way better confluences. And it's awesome. Like here as well, this is a wonderful unconfirmed bearish bias because you are at a resistance zone and you get a nice wick to the upside and you formed a doji. It's perfect. Like if you have on the, let's say you are trading the daily, the 4 hour, you draw in your support resistance zones and see, okay, here I have unconfirmed bearish bias, I have unconfirmed bullish bias. Like you have long wicks. Long wicks is perfect. You have you broke this zone, but completely retraced back and left a long wick behind. This is perfect because then you know as well there are a lot of people who went into a long position on the smaller time frames but completely got trapped because you now have the knowledge to say, okay, I look on the 4 hour and okay, we have an unconfirmed bullish or bearish bias, and now I confirm this bullish or bearish bias with a lower time frame analysis. And you can say, okay, on the, let's say here, on the 15-minute, I have already more candles because you can now look deeper into it. You are doing multi-time frames. You're not only looking on one time frame and say, okay, this pattern. Because why do people say, okay, patterns don't work? Because people are stupid. People say, okay, I check the 4 hour, look for patterns. Oh shit, they don't work. Why they don't work? Because they're in the middle of nowhere. If you have a look on a higher time frame, they are in the middle of nowhere, and then they ask themselves, why was this breakout not in the direction I wanted it to be? Because sometimes there was you have a pattern, and the pattern is let's say a bearish pattern, but you are at the support. Then I wouldn't trade the support in any directions because the chance is you get a bounce of this support resistance area, and the other thing is you don't know if you get a did you break through because the pattern you saw is yeah, is completely different. I don't know if I can find it, but on the Nasdaq, no, not the mini Nasdaq, the S100 here, I think it's this one. And if I go to a higher time frame, I don't know if I have. No, that's not what I want to do. Because I think I posted it in my channel. Let's see if I can find it. The Nasdaq trade. See if I can find. No. This was my Dow Jones trade. No, I don't think I posted the other Nasdaq trade in here, because the one Nasdaq trade I did was as well a perfect retracement down to a support resistance zone, followed by a, if I have it on any of these charts, followed by a channel pattern like here, like you have, don't expand it to right or left. So this is the next thing I want to tell you, like a channel pattern. Let's do it here. No, not the EMA I want. Perfect. So you have a channel, and you know, okay, price is coming from the bottom, and this is a flag pattern. I think you all know this, and people say, okay, most of the time the price is coming from the bottom, consolidating, and then moving up. But there's always a chance that, let's say, it won't work. Like you have something like this. Price came from the top, then moved into this channel, consolidated, and then people said, okay, it will break to the downside for sure. And guess what? I said, nah, you're wrong, you're completely wrong. People said, why? It doesn't make sense. If I have a bullish flag, it will continue to be bullish. It will be rally, base, rally. Or in the opposite, like a rally to the downside, a base, and then another rally to the downside. And I say, no, you're completely wrong. And why did I know that I was right? Because I had here, I had a daily support resistance area here. People haven't looked at a higher time frame. And I can say it with a lot of confluences and a lot of confidence, this pattern is valid. Because price came from above, consolidated at the perfect one-day support zone, and then I entered here. I entered right here, stops below, like this, and then price went up. And if you can see in my channel, I posted my recap here, and I don't have it marked on it. Sorry, but same here with the US 30, plus 11 risk reward. I risked 1% and made 11% pot growth with a single trade, trading only this basic kind of stuff. Price went down, consolidated. I know, okay, I don't know whether price is going, or do I? And I know, and I zoomed out and I watched, as always, go from a higher time frame to a lower time frame, and then I saw, oh, okay, there is a one-day support perfectly lining up, and then I will trade definitely the breakout to the bottom, to the top. Price could always do something like this. And guess what? People say, haha, I am smart. I go in here, so something like this, and then, oh, why haven't it worked? Because you're stupid, and the price was at the support. For sure you get wigged out to get a lot of momentum to the upside, because a lot of people are trading flags like continuation patterns. And most of the time, flags are continuation patterns. But don't trade blindly. Look at the higher time frame, look at the lower time frame, and then check all your facts, all the things you have combined, and then you know, okay, I know the direction where the trade will play out. So this is how I use patterns, and this is how I can say I use patterns with an awesome win rate, because so patterns won't fail at all, because you can see very clearly which pattern I can use, which pattern is valid and which pattern is invalid and is just a retail trap. So you have a small pattern course as well in this small 1 hour session. So this is what we all covered now in 1 hour. I hope you learned a lot of things, and if it was something new, perfectly, you learned something that people still don't understand after many years, because look at YouTube. They only say, okay, use patterns this way, and this is the correct way. But why patterns work for them but not for you? Because they are smarter than you. They don't tell you, look at the 4 hour, look at the 1 hour time frame, go down and find these patterns at a higher time frame support resistance area, because then they will successful. No, they don't tell you that. They say, okay, if I only, now you have to get in this mindset to say, these people, why do they only tell you, hey, trade these patterns? Why do they only tell you trade this wedge pattern or this channel pattern? Let's talk a bit more general. This channel pattern, which is a bull flag, a bear flag, whatever. Why do they only say, hey, trade this? They can trick you and say, hey, this pattern is working like this, and they are right because the pattern is like this. But there is, but now you say, okay, I found this pattern. I don't check anything because I know this pattern works, and you got faked out or you got stopped out like here. And why? Because they haven't told you look at the higher time frame to make it more valid. No, because if they would have told you, you would went into this trade, not this. But they need liquidity. You want to play on a big, you want to trade on a high time frame. You want to trade with a lot of money then, and with a lot of volume, then you need to generate volume. And how can you generate volume? With stupid people who don't understand or don't know, do multi-time frame analysis. Because if they don't know, they jump in, get stopped out, lose their account, blow their account, whatever, because they fall for retail traps. You always have to look at the bigger picture and on the smaller picture. You have to do a multi-time frame analysis. This is the big word of today. Multi-time frame analysis. Because, as I said, everything works. If you trade Fibonacci, it works. If you trade support resistance, it works. If you trade trend lines, it works. Anything works. It just comes down to one thing. Or two things, sorry. The one thing is your mindset. So you can I know everyone can repeat this strategy because there are so many people impatient and all that kind of stuff. But the major thing comes down to multi-time frame analysis. Do your analysis not only on one on one time frame. No, do it on multiple time frames to get a more clear look about the bigger and the smaller picture, to get a nice view what is really going on in the market. Where are the traps and where are all the other things? And now you can say, okay, I know where to enter with a extremely high risk reward instead of 5, like with a 20 risk reward in the same trade, but with more confluences and with way more detail. And it's just mind blowing how easy some things are, but a lot of people don't look at the at different time frames. They don't look at them. So with this strategy, not gonna lie, if you use this strategy with a good mindset, and you are really patient, you wait and everything, I guarantee you, next month you have a win rate of 90% plus 100%. I guarantee it to you. And this was the stream for today then. So if you have any more questions, as I said, feel free to ask. If there aren't any more questions, I want to discuss to you, like have a very deep look into anything, like, I don't know, anything that comes to your mind, I can do a stream. As I said, I stream every Thursday. If you have any themes or anything I want to you want to talk about, yeah. So, great stream. Thank you, dude. I must go near 3 a.m. here. Sure. Good night, man. How big should the support and resistance box should be? So, there isn't anything perfectly. I can't say perfectly like this and like that, but let's go back to BTC. I think it was, let's go back to this, and then it was the BitGet one. Yeah, perfect. And then the chart back on. So you can't say perfectly it's I don't know, like $50 or whatever big, but I would say don't make it too big. Like try to really capture only the wicks or really the endings of the candles to keep your stop loss, to keep your area as small as possible. I don't have any guidelines to that. I'm sorry. Like here. No, let's see. I can't tell you perfectly because it's very hard to explain. I would lie when I tell you it's really easy and no, it's easy, but how to draw them exactly, because there is no perfect definition how to draw them. It just comes with experience. This is the only thing I can say, but for something like this here, so you have a lot of consolidation, then I would try to capture this consolidation with a support resistance area, and then would move this zone so I have the most touches on this zone. So what you can do, what will help, like just to just start a zone and then draw it back, like draw it down like 1 centimeter. Yeah, it doesn't have to be perfect, but I think it's a nice indicator
for new memories. Time to make,
and then just say, okay, I have here, and then press on Control and on left mouse button to copy this, and then you can adjust the zone as well as you like. I wouldn't recommend to do zones like this. So in my opinion, less than 1 centimeter, and 1 centimeter is really the maximum, because if you have higher time frames, and this is your area, for example, like I would recommend half to 1 centimeter, and like this, and then you go on a lower time frame. The problem is, as lower you go on a time frame, the bigger these areas will get. So I would recommend keep them as small as possible. So for sure, if you are in the 1 day and move to the 1 hour, they are way bigger, these zones. But as I said, I would recommend keep them as small as possible to don't have a full chart with only one line, because you made this zone way too big. So stick to like half a centimeter. But it comes with experience. Yeah, it's just experiences. It's just a matter of time. Do it, try everything out, and then you will see, okay, this works. And yeah, if you practice every day drawing support resistance, it's easier than you think. It's way easier. So, do you guys have any more questions? If not, I will wrap this stream up for today. I hope you liked it and enjoyed it, and for sure, as I said, I hope you learned a lot. As far as I know, the stream will be recorded. I can't tell you 100%, but and if there's anything, that's not what I wanted to do. And if there is anything, feel free to ask, ping me, DM me. I will try to respond as quick as possible. And yeah, this will then be the stream for today. Have a nice day, have a green day, and yeah, if there's anything, hit me up. And see you next time, guys. Bye bye.